Hello everyone, Kingdom Silver here, and today's video is an important one because, ladies and gentlemen, I have found a chart, and I believe that this chart may signal not only a significant and impending stock market pullback, but on top of that, gives us a hint of where the gold and silver price may be heading in 2025. You're not going to want to miss this information. Sit back, relax, and enjoy the rest of the video. Thank you so much for checking out the channel. Let's dive right in. So special thanks, a shout out to Rob Kientz of the Freedom Report. I was scrolling through Facebook and stumbled across one of his posts on his community section where he shared this chart, and Rob actually was one of the first people that got me into gold and silver. He's one of the first people that I followed on YouTube, and has a wealth of knowledge, great information, and he's a CPA, so you know he's good people, ladies and gentlemen. So without further ado, here's the chart, and I think this is significant. Why? Because this chart is telling us that the S&P 500 price to book ratio has hit a record high, right? And there's an article from the Motley Fool, as I've been doing some research on this topic, that actually says that that number in November of 2024 that it hit was 5.30. So hold on before you turn off this video and you're like, well, what does this have to do with the market? What is this chart telling us? And hey, you're a silver channel. It says it in the name right here. What does this tell us about the price of silver? What does this tell us about the price of gold? Well, I'm glad you asked. Give me a minute and I'll explain it. So the first thing that we need to know is, well, what exactly is the price to book ratio? And I also have an article from Investopedia that describes it, breaks it down in detail. The summary of what it is that it is the price per share, right, that you can get in the market today, divided by the accounting or book value per share. So how do you get those numbers? Well, you know, the market value piece is pretty easy, right? Because you can just take whatever the price of the stock is, you know, from Yahoo Finance or another website, a financial website, and you can get that piece. For the book value per share, it's taking the total assets of a company and it's subtracting out total liabilities and also any intangible assets. Take all of that out, and then you divide that by the number of shares that are outstanding in a company, and that's where you get the book value. So what is this chart telling us? Well, what it's saying, ladies and gentlemen, is that if you go out and pay for an average company in the S&P 500, you are paying a 5.3x premium on the price of their stock as opposed to what the value of the actual assets are. That's pretty significant. Now, if you read this Motley Fool article, if you do a little bit of research, you'll find that it's actually not uncommon for some stocks in the S&P 500 to have a higher than normal ratio, right? Every market is different, every sector is different, but you know, they make the case that it could be in the, you know, 2.5-ish, 2.75-ish range of a premium that you would pay. However, when it gets significantly out of whack like this, this can potentially signal a problem. The Motley Fool article makes a note of this, saying that the last time that some of the highs that broke, as we saw this in 2021, we saw this in 2000, and at those times when we saw this significant price to book ratio high, then we saw a significant S&P 500 pullback, right? And that's not necessarily the hottest take in the world, because, you know, if you follow the stock market, you know that the S&P 500 has been on this significant bull run for a long time, and at some point you're gonna see a market correction. It's just how these things work, and it could be a pretty significant one. In fact, I think this is even more critical, ladies and gentlemen. I'm sharing this post, the original post that Rob did, with this chart in it, and he said, now I haven't been able to verify this. I trust Rob's research, but I haven't been able to verify this myself. Hopefully you can do your own research and be able to find it. He says actually that you're not seeing some of these highest book values, you know, this price to book value discrepancy since the Great Depression. Now, if that doesn't scare you, or maybe just because we don't scare people on this channel, if it doesn't cause you to pause, if it doesn't cause you to think, to take caution, then I think there's something wrong, right? So to me, that's a pretty good sign that, hey, maybe things aren't as quite rosy with the market as we're thinking, because it's not going to go in perpetuity high after high after high. There will be pullbacks. It's just how these things work. But what about silver and gold? Where does that come into this equation? Well, we know that in times of uncertainty, gold is the standard, right? That people flock to gold. They flock to precious metals, and silver is always following that. And in fact, typically in a bull market for precious metals will actually outperform gold. So if we're going to see a pullback in the stock market, right, if that's going to go down, then there's a decent chance that you're going to see the gold and silver markets, the price go up. So with that, we're going to end the video today. In the comments, I'd love to hear what you think about this. What do you think about this chart? Do you feel it's, got good information? Are you, leaning towards the conclusions that I'm making? Or are you saying, hey, I don't agree. I feel like the S&P 500's got more room to run, and I feel like gold and silver, they might not be quite ready yet to go parabolic. I would love to hear what you think. If you're enjoying this content, would really appreciate a like. And if you're really enjoying what I do, hit a subscribe. There's more content coming where that came from. It helps me out, but more importantly, it gets the word out about gold and silver. So without further ado, ladies and gentlemen, be blessed, be a blessing to others. We'll see you later.